Hey everyone, happy Wednesday. I am doing my video update today because tomorrow is Thanksgiving. Hope everyone has a great Thanksgiving. Take the time to rest, enjoy it with family. I'm thankful that I don't have to cook this year because, oh my gosh, that's stressful. So for all those who are cooking, I feel for you. But I wanted to get this rate update out. There's kind of a lot to talk about. So what you can see here is the bond market. For those of you who are new tuning in, interest rates have an inverse relationship with the bonds. So as a certified mortgage planner, I follow the bond market to see how interest rates are moving and is now the time to lock or not. And so when the price of a bond is high, here's the price of the bonds here. When they're high, like this here, then interest rates are low. But when they're low, like right here, then interest rates are high. So we're following this roller coaster to see where are the rates, where are they falling. All year, we've been on a decline of the bond prices. So you can see it right about here is January 5th, 2018. And you can see the price of these bonds just continue to go down. If I zoom in on this here, it'll look at a 3-month. And so again, we've still been going down. What we experienced November 8th was literally the lowest point that the bonds have received, which means the highest point that we've seen rates in the last 7 years. There's a lot of talk about that in the news. But the good news is look what has happened since then. We saw a little bit of correction here. So that's the good news, is interest rates have recovered a little bit. I think the million-dollar question that everybody's asking is, where is the direction of mortgage rates going? And all the economists will tell you that interest rates are going to continue to go up. We do think that, but the one thing that we have going in our favor right now is that we have a very strong U.S. dollar. And that's helpful because when our U.S. dollar is strong, you'll see that inflation goes down. Or, right now oil is pretty cheap. So if you go to the gas station, you'll probably notice that the price of gas is cheaper than what it's been. So a stronger U.S. dollar helps with imports and things like that. So hopefully that remains. If it continues to stay strong, then it might actually prevent the Feds from increasing the interest rates in 2019 in Q1, which is what, a lot of people are looking at. So our recommendation is right now, if you're at least within 30 days, I would recommend locking. But you can see here that we're starting to see some improvement, and a lot of that is because of the U.S. dollar. Now, the other thing I was going to tell you is, historically, when our unemployment numbers reach 4.5 or below, research has shown that we enter into a recession about 3 years once we get to that point. Well, we got to 4.5% and below a year ago. So that means that by the summer of 2020, we're expecting to be in a recession, which isn't great for the stock market, as you guys can see. But usually a recession is a good thing for mortgage rates, because when that happens, mortgage rates go down and you start to see home sales go up. So that's interesting. We hit that mark a year ago. It's a good thing to keep an eye on. But lastly, if you guys have any questions, please know every Thursday I post an interest rate update. Be happy to talk through things like, should you refinance, remove your PMI. We are licensed in Colorado and Texas, and we can help you refi or buy or even a new construction. So you guys have a great Thanksgiving. If you have any questions, you know how to get a hold of me, Denise@yourmortgagenerd.com. You guys take care. Bye-bye.